It's time I answer one of the hardest questions as an investor, which is if I can only pick 5 dividend stocks to buy and hold forever, and I mean until the end of my days, which dividend stocks would they be? Now, I'm not only going to answer that question for you, but I'm also going to now detail out all of my conviction on each of my stock picks and give you just a fair warning right now at the upfront. Some of my picks might take you by surprise. But here's the thing. To each investor their own, so your astonishment is welcomed and your opinions, critiques, and feedback are also highly encouraged as long as you drop a comment of substance while also sharing your 5 forever buy and hold stock picks down there in the comments. Now, I also want to share with you that I'm factoring in right now my investor profile. So as for my stats, I'm a 30-year-old investor, meaning I have decades of time to go before I legitimately retire. My risk tolerance is also higher, I think, than most, at least within the dividend investment community. And I certainly am highly focused on not necessarily dividend yield, but dividend growth. That has become one of the most important metrics for me at this point in time. Reason being, well, just from sheer experience, while collecting dividends every single month was incredibly exciting and boosted my ego, I will tell you firsthand it's 10 times more exciting watching your brokerage account actually soar to new heights from investing in companies that are competing in the growth arena, not just the dividend arena. Now, what I also discovered along my path was that we can't discount the higher yielders entirely, but there is just a time and a place for them to come into play for you. And if you really want to hit financial freedom, it's really all about risking more when you can afford to actually take the risk to hit your milestones much quicker to help your money compound for you much faster. So after pivoting from a portfolio of say 35 to 40 holdings down to about 10, then to 8, and now to even less than that, and going from enjoying dividend yields to targeting dividend growth stocks, these are now the 5 stocks that I would pick to get financially free much earlier. Matter of fact, like I said, the buy and hold never sell until the end of my day type of stocks. So let's go ahead and kick this whole thing off with Waste Management, ticker symbol WM, which is in the business of trash collection, recyclables, and dumpster rentals. Now, it is honestly probably one of the least sexiest companies out there that you can ever imagine investing into. I mean, when you think about making money and boatloads of money, I wouldn't think you're thinking about a trash collection company. You're probably thinking about the Nvidias, Googles, or Microsofts of the world, not Waste Management. So then why do I personally think that Waste Management is the perfect fit for a longer term buy and hold type of investor? Simple. One man's trash really is another man's dividend, and with Waste Management being one of the only real industry leaders in this space, you cannot ignore this company nor go wrong with it. Of course, their only real expense comes down to their trucks and the maintenance on those trucks, which is great. But thanks to all of us consumers consuming more and more by the day and then really ditching all of it the next day, Waste Management will likely just remain in business for a long time coming. As for the stock and how it's trading right now, let's pop open the stock chart to see at least this year alone, Waste Management has been performing very well, up over 16% in the year, trading for $234 per share right now. But have a look here at the longer term trajectory on the 5-year chart. We're going to find that Waste Management soared by over 132%, which is the equivalent to some of those big tech players that are out there that I mentioned earlier. But especially this year, Waste Management has them all beat. As we come down to the income statement, have a look here at the revenue that's topping 8%, while their net income almost hit 20% worth of an increase. Continue to come down a tad more here for the balance sheet metrics, where we're going to find that they have a staggering $44 billion plus dollars in assets to just $36 billion in liabilities. Now, as for the dividend, well, let's go ahead and click into Simply Safe Dividends, where we're going to find that Waste Management scores an 80 in terms of overall safety, as it dishes out a yield of 1.41%. Scrolling down, we're going to find the payout ratio here is hovering around 43%, while Waste Management continues to keep up a dividend streak here of at least 25 years. Now, we also have a solid 7.2% average dividend growth rate. Next up, we're going to talk about a dividend growth stock that has been an absolute powerhouse. It is Costco, ticker symbol COST, which is a retailer that not only uses the membership warehouse business model, but it was actually the pioneer for this type of business model and ultimately became the world's largest seller of groceries, alcohol, diamonds, and electronics. They are also known for their buy in bulk type of deals as well, and exceptional and I mean exceptional customer service. That's business done right. Now, while we have the online competitor equivalent, I want to say is Amazon, I would never be so quick to actually cast doubt on a Costco type of play. It's the community go-to retailer that will get you out of the house and give you an experience that you're looking for. And I actually don't think brick and mortars will ever truly disappear. Because of that reason, consumers are looking for an experience every now and then just to get out of their house. Now, have at it here with the Costco stock up on the year by 10%, despite all the scares from tariffs and retailers holding back at the moment. And if you click into that 5-year chart, we're going to go ahead and find a solid company that has crushed it over the past 5 years, soaring by over 230%. More importantly, if we scroll down, we're going to get to the health report here, at least in terms of the financial statements, with revenue up over 5%. And in terms of net income, we have 17%. And as for the balance sheet, we're going to find that Costco has accumulated over $69 billion in assets to just $46 billion in liabilities. Now, clicking into Simply Safe Dividends here, we're going to get a safety score of a 99. You can't get much better than that. The dividend yield itself sits at 0.51%. Scroll down with me where we're going to find Costco's payout ratio at just 26%, while they hold strong to a 20-year dividend streak, all while growing the dividend here by an average growth rate of 12.6% year over year throughout the last 10 years. Now, investors, before I run through the next 3 dividend stocks that made it into my buy and never sell stock list, I want to actually ask you to outright join me here on this channel by subscribing. The reality is over 50% of you out there are tuning in every single video. Videos like this, Masters of the Market, all of them, but you're just not subscribed. So if that's you, go ahead and subscribe now. And if you want more videos like this one, go ahead and tap the thumbs up button so it lets me know this is the type of content that you're actually looking for and you want more of. With that, let's go ahead and kick back into gear here with the one and only healthcare whale, United Health, ticker symbol UNH, which is the largest insurer within the United States. And with just about an only 1% chance of our healthcare system actually changing drastically for the masses, I don't really think that's going to happen, at least not in our lifetime. Well, I really think it just creates a wide moat around United Health. And while the company has in fact been getting nonstop bad press for quite some time now, I do want you to recognize the stock continued to climb, while their management team just continues to ensure that United Health delivers through on what they need to. So if we're now looking directly at this stock chart, you're going to find that United Health slid recently from $594 per share to $387 per share. I think that makes for an opportunity as of this video. Overall up on the year by 23%, but click to the 5-year chart with me to see some steady greenery here worth of appreciation. And better yet, we're going to come down to that income statement. We're going to find that despite all the headlines recently, United Health continues to pull its weight with over 7.7% worth of an increase there in revenue. Now, it is noteworthy here to take a look at this balance sheet to see $298 billion in assets, just $195 billion in liabilities. As for the dividend metrics, Simply Safe Dividends has United Health ranked at a 90 of a safety score. Then we get a 2.17% dividend yield. United Health also maintains a lower payout ratio, which is great for us at 30% there, and going strong on that dividend streak for 32 years without a reduction. All while United Health continues to grow this dividend by an average growth rate here of 19.3%. And finally, get our last 2 dividend stocks, which definitely I think are going to make some questions arise for some of you. But again, recognize that this is my investor profile here factored in, and it means they both make sense for me. Alphabet's first up here, ticker symbol GOOGL. Alphabet is the largest search engine in the world, while also owning the second largest search engine in the world, YouTube. And with Google Ads playing a major role while we move deeper into a digital age here, Alphabet has more room to run. Now, there's of course the whole OpenAI saga recently with recent news hitting the market. Apple might be teaming up with OpenAI. Google might take a bit of a hit, but I think this is ultimately a great play for the longer term investor. And we can see that the damage has been done with the OpenAI news, as Alphabet's down on the year now by officially 17+%, trading for $155 per share. Clicking to that 5-year chart though, we do see it's up over 124% worth of appreciation, not to mention their increase in revenue comes in at around 13%, while net income jumped by over 35.6%. All while the balance sheet is incredibly healthy. I think one of the healthiest balance sheets I've ever seen at $450 billion in assets to $125 billion in liabilities. Now, as for the dividend, I know it's not exactly what you're thinking for a go-to dividend stock, but I think think Alphabet has the potential to really become a massive dividend grower. So here we are with a safety score of an 80, a dividend yield coming in at 0.54%. That will likely grow by leaps and bounds over time because this payout ratio remains incredibly low at just 11% right now. And then last but not least, the one company that has been with me since day one and has made me more money than any other position in my portfolio, we have Apple, ticker symbol AAPL, which I know no need to really introduce it to you all. You probably know it very well, but I do want to make just one remark about Apple, that if you're troubled or worried about their lack of innovation, well, I'm going to go ahead and tell you up front here that I don't think you really understand Tim Cook's game plan when it comes to Apple services or their strategic direction. We're looking at the very fact that we all enjoy a level of certainty in their products while ensuring that the phone itself has everything that we need and desire within it. Again, Apple services is the focus. So just get really a feel for where Apple is trading right now as of this video. It's sitting underneath $200 per share thanks to the trade war woes, and that's ultimately down 20% on the year. However, big picture, I think we're going to be up by a long shot, just like we have been over the last 5 years, up over 121%. We scroll down to this income statement here. Revenue right now is increased by 2%. And scrolling down a bit more here, we're going to discover Apple's asset nest egg here of over $364 billion in assets, just $308 billion in liabilities. And clicking into Simply Safe Dividends, we will enjoy Apple's 99 safety score, along with another lower but powerful yield coming in at 0.52%, while the plan is to grow the dividend thanks to the company payout ratio remaining low at 14%, their 12-year dividend streak, and most importantly to all of us, this dividend growth rate coming in at 8%. Now, investors, there you have them, my 5 buy and hold, never sell dividend stocks as of right now. And again, let me just tell you this. If you go ahead and comment, I don't want any comments that are a one-liner. I want some real substance in those comments. Critiques are welcome, feedback welcome. And more importantly, I want you to tell the community here the stocks that you have in mind for your 5 buy and hold, never sell stocks. If you still haven't hit $100,000 within your brokerage account, tune in right here to this video, subscribe, and I will catch you all in the next video.